Everybody talks about the chip. Almost nobody talks about the company that sells the power, the vacuum, the gas, the lasers, and even the chemistry that surround every single wafer while that chip is being made. That company has a name, MKS Instruments, and a wonderfully nerdy motto: surround the workpiece. I'm Onyx.
And I'm Nova. Welcome back to the Working Thesis. Ticker MKSI. If you want to understand how AI quietly shows up in the boring, mission-critical guts of a chip factory, this is a great company to study. Usual framing. This is an explainer, not a recommendation. Let's get into it.
First, a quick and honest word. Everything you're about to hear is really just the two of us thinking out loud, personal market commentary, made for learning and for fun. It isn't investment advice, and it isn't a recommendation.
And when we talk about a specific company, it's only ever to make a bigger idea click, never a nudge to buy or to sell. So take it as a starting point for your own curiosity. Do your own research and make the call that's right for you. Here's the one idea to anchor on. AI doesn't just mean more chips, it means more complicated chips. Leading-edge logic, high-bandwidth memory for AI accelerators, fancy advanced packaging that stitches chips together. Every one of those trends adds more processing steps per wafer.
And more steps means more of MKS's content riding along on each wafer and each circuit board. So MKS isn't a bet on any single chipmaker winning. It's a bet that the whole industry keeps making harder, more complex chips. That's the picks and shovels logic, one layer deeper than usual. Snapshot. MKS is headquartered in Andover, Massachusetts, with around 10,000 employees. It runs in three segments. In early 2026, semiconductor, about 43% of revenue, electronics and packaging, about 30%, and specialty industrial, about 27%. Total quarterly revenue a touch over $1 billion, up around 15% year over year.
Annual run rate is somewhere in the $4.5 billion range, and the market value is around $28 billion. So this is a serious broad-based supplier, much bigger and more diversified than a single product component maker. Let's unpack that motto, because it's the whole strategy. The workpiece is the wafer or the circuit board. Instead of selling one component, MKS tries to sell the entire cluster of mission-critical systems that surround it inside the process chamber to control, monitor, and optimize everything touching that wafer.
Think about what a chip tool actually needs: a perfectly controlled plasma, an ultra-clean vacuum, ultra-pure gases delivered at exact flow rates, precise lasers and optics, and, increasingly, the wet chemistry to plate metal connections. MKS plays in all of those. The pitch to a toolmaker is, instead of stitching together a dozen vendors, get the whole controlled environment from one partner who's already qualified. Let's go one level deeper on the semiconductor pieces. First, RF plasma power. To etch or deposit material on a wafer, you ignite and control a plasma, and that takes radio frequency power generators and matching networks that are stable to an extraordinary degree. Tiny instabilities hurt yield, so this is a precision qualified subsystem, not a commodity power brick.
Second, vacuum. Gauges, valves, pumps, controllers, because most of these processes happen in carefully controlled low-pressure environments. And third, gas delivery. Mass flow controllers and valves that meter ultrapure gases for etching, deposition, and cleaning. All of it is the unglamorous plumbing that every advanced fab tool absolutely depends on. Now the other two legs. Photonics and lasers, which MKS got largely through Newport and Spectra-Physics, long-standing names in optics, motion systems, and high-performance lasers used for inspection, metrology, and precision processing.
And then the big one, chemistry. In 2022, MKS bought a company called Autotech, which makes the specialty plating chemistry used in printed circuit boards and advanced packaging, the actual electrochemical process that builds the tiny copper interconnects AI servers lean on. That deal pushed MKS beyond the wafer itself and into how chips get packaged and connected. Strategically, it rounded out surround the workpiece. Financially, as we'll see, it came with a catch. So let's talk about that catch, because it's the single most important thing about MKS today. The Autotech acquisition cost about $5 billion, and to pay for it, MKS took on a lot of debt. Its leverage, net debt against earnings, jumped from under 1 times to above 4 times almost overnight.
And the timing was rough. Rates rose right afterward, so the interest bill stung. Ever since, deleveraging has been priority number one. They paused buybacks and acquisitions and pointed free cash flow at paying down debt. By 2026, they've made real progress. Net debt is down to roughly $3.5 billion, but the capital structure still includes term loans, convertible notes, and euro-denominated senior bonds. The debt is both the chief risk and, in the bull case, the hidden upside. As it comes down, more of the profit flows to shareholders. That's the deleveraging torque idea. On management, the CEO, John Lee, has run MKS since 2020 and joined back in 2007, and his background is deep semiconductor. Time at Applied Materials, at Lucent, at Bell Labs, with serious chemical engineering credentials. This is a technical operator, not a promoter.
The CFO, Ram Mayampurath, took the seat in late 2024, coming from finance and treasury roles with an M&A and transformation bent. That's a telling pairing, a deeply technical CEO and a transformation in finance CFO, which is exactly the combination you want for the central task of integrating Autotech and paying down the debt without starving research and capacity. Credible team, very specific assignment.
Competitively, in RF and plasma power, the field is a tight oligopoly. MKS, Advanced Energy, and Comet, with Dihen around the edges. In vacuum and process control, names like Edwards and Pfeiffer. In photonics, Coherent, IPG, and others. It's concentrated, qualified, and sticky.
The contrast people most often draw is MKS versus Advanced Energy. Advanced Energy is focused, mostly precision power, higher margin, and a clean net cash balance sheet. MKS is the broad heavyweight, power plus vacuum plus photonics plus chemistry, but it carries the Autotech debt. So MKS gives you more of the whole tool chain. Advanced Energy gives you a sharper balance sheet and a tighter margin story. Both ride the very same AI-driven equipment wave. Who buys from MKS? The anchors are the big wafer fab equipment makers, Applied Materials, Lam Research, and Tokyo Electron, who design MKS subsystems into their tools. Those relationships are valuable precisely because they're sticky. Once you're qualified into a tool platform, ripping you out is expensive and slow.
On the packaging side, the customers are PCB and advanced packaging manufacturers using Autotech chemistry and laser processing. One thing to keep in view, MKS has heavy exposure to China and the broader Asia-Pacific region, roughly a quarter of revenue, which adds both growth and volatility, especially with export controls in the picture. The backdrop is a genuine upcycle. The industry forecasters see wafer fab equipment spending climbing strongly through 2026 and 2027 into record territory, driven by AI, leading-edge logic, high-bandwidth memory, and advanced packaging. In other words, MKS is heading into an upswing, not sitting at the bottom.
And within MKS, the standout has been electronics and packaging, the Autotech-driven part, growing fastest, because advanced packaging is where a lot of the AI complexity is landing. The structural tailwind is simple. More radio frequency, vacuum, photonics, and plating content per AI wafer and per high-layer count board. The more complex the chip, the more MKS sells. Now the risks, and the first one dominates. Debt. Even after solid paydown, MKS carries meaningfully more leverage than its focused peers, plus convertible notes that bring potential dilution and refinancing complexity. The balance sheet is the thing that can amplify any downturn.
Second, cyclicality. The core business rides the semiconductor equipment cycle, and today's earnings may be near a cycle peak, not a normalized level. Third, China and export controls. That quarter of revenue is a live geopolitical risk. And fourth, integration. Fully blending Autotech's culture and synergies is still a work in progress. None of these are fatal, but stacked together they mean this is not a sleepy, low-volatility name. Valuation is where the discipline really matters. The trailing price to earnings looks very high, call it the high 80s, while the forward multiple is a lot lower, around 30-something. And here's the trap we always flag. Do not read that lower forward number as automatically cheap.
Because that forward multiple sits on rising, possibly near-peak cyclical earnings. If the equipment cycle rolls over in 2027 or China tightens, those forward estimates can fall and the multiple can compress at the same time, a double hit. For context, the whole stock has re-rated dramatically. Its market value went from roughly $7 billion to 11 to 28 billion across a couple of years. That's a powerful run, and it raises the bar for what has to go right from here. Compared with advanced energy, smaller, focused net cash, MKS is simply the bigger, broader, more leveraged way to play the same wave. The two cases. Bull. MKS is the broad picks and shovels supplier to AI-driven equipment, memory, and advanced packaging. More content per wafer and per board, plus that deleveraging torque kicking earnings and cash flow higher as the autotech debt comes down.
Bear. The stock already prices a powerful cycle, while debt, convertibles, China exposure, and plain old equipment cyclicality stack up the downside. Today's rich multiples may turn out to be peak cycle multiples. It's a high-quality business. The debate is almost entirely about price and timing, not about whether the company is good. Watch list, the leverage ratio and the pace of debt paydown. Commentary from Applied Materials, Lam, and Tokyo Electron on equipment orders. The growth rate of the electronics and packaging segment, and any change in China exposure or export control rules. Those foretell you whether the thesis is strengthening or fraying.
Bottom line, MKS is the heavyweight of everything around the wafer. More diversified than its focused peers and levered to the same AI, memory, and packaging upcycle, with genuine deleveraging upside. The honest tension is that you'd be paying a full, possibly peak cycle multiple on a leveraged cyclical that's already run a long way. High-quality business, price and timing are the whole debate. That's the MKS Deep Dive, educational only, not advice. Thanks for listening, and we'll catch you next time.
And that's where we'll leave it for today. Thank you, genuinely, for spending part of your day thinking this through with us.
The whole idea of this show is pretty simple. We hold a handful of theses about the world, and we test them out loud, together, a little more each day. No crystal balls, just curiosity and a willingness to be wrong.
So if that's your kind of thing, stick around for the next one, and tell us where we're getting it wrong. Honestly, the pushback is our favorite part.
Until next time, take care of yourself and keep asking good questions.